Hello everyone, today is Friday, July 15th, 2022. My name is Evan, and I want to welcome you back to another edition of Stock Market Weekly, episode 640, presented by the Trade Risk, where it is our job to break down the most important trends, price action, and noteworthy moves that you may have missed this week across financial markets. If you're brand new to this video series, welcome. Thanks for being here. Here's how these videos work. We break up our analysis into two parts. In part one, we look through the numbers, pick apart everything that stands out, looks different, interesting, or notable. And then in part two, we jump into the charts. We take a very close look at price action, key levels that we want to pay attention to, and those general market trends. So hopefully that sounds good to you. Before we jump into the headlines, today marks the launch of our Stock Market Weekly Extended Series membership. And so what that means is if you do want to enjoy everything from part two, if you want the price action analysis, the key levels to pay attention to, some of the advanced breadth studies that we're going to look at in today's episode and in future episodes, then you will need to be a subscriber. We wanted to make it as affordable as possible. We offer two options. You can either buy an individual episode, so like a single episode pass for $5, or you can subscribe for the month for $15. So both options are available. We really wanted to have the individual episode pass because to us, you may be watching this and you may not need the in-depth analysis every single week. You may only need it, once or twice a month, or, if you've got a lot of trades going on, or if you were out of town for the week and you really just need to be able to catch up. It's like buying a newspaper. It's sort of the analogy that we were thinking of was like buying a newspaper. If you need the news that week, if you need to know what's going on, then you can pick up that individual episode, no strings attached, and off you go with, your analysis. But if you do want to save some cash, if you want to stay up to date every single week, $15 a month is the monthly membership. So you can find that links in the description of this YouTube channel, or if you're watching it on our website, just scroll down and you'll see those options available to you. So hopefully that makes sense. If you have questions, leave a comment below, and let's get started with some of the headlines from this week. So the big story, of course, was inflation. Inflation hitting a new, I believe, 40-year high, 9.1%. That's what it came in at for June. So that eclipse that took out the prior 8.7, 8.8, high eights that we just saw on the last print. And we had certainly markets reacting quite negatively to it. In fact, they were selling off even going into the print there. And so we had lots of volatility this week. We did get a rebound. We're going to talk more about that later. We had earnings season officially kicking off with financial names, and we're going to look at that price action pretty closely later on as well. Now, the big story, I think, or what we're going to spend a good amount of time talking about is just what the Fed funds implied future rates is looking like. And effectively here is the reaction that we saw after that inflation print. And we've got some good data and some slides that we're going to look at in this video a little bit later on. And we've also got a couple of individual trade ideas, and we've got some interesting market internal measures that are showing some relative strength and some interesting signals for a particular segment of the market. So lots to cover. Let's get into some of the numbers here. If we look at the right-hand column, you can see it was a down week across the board, minus 1% approximately for all the U.S. markets here. It was much worse at the lows of this week, but we did get a good rebound here Thursday, Friday, and so the markets did recover some of those losses. You can see international stocks here did start to roll over a bit, and now starting to see a little more weakness creep in over the past 4 weeks or so, as you can see here on the 1 month returns. If we take a look at market trends here, again, pretty much the same thing that we've seen over the past couple of weeks. We still have this short-term trend that is hanging up here for the U.S. indices. They're still rising on the 10-period simple moving average. That's just what we're using as our measure of short-term trend. You can see the primary trend, longer-term trends are, of course, still declining. Now, one of the interesting things is volatility. Volatility came down this week, and in fact, it closed at 1 month lows here. So it closed the S&P 500 VIX closed at 24.26. And again, this is in the context of, a 40-year high CPI print. We've got earnings season that we're about to go, through, and the market doesn't seem all that concerned on a relative basis here. And I think that's pretty curious and interesting. We'll talk more about that. You can see Nasdaq volatility getting real close to that 30 level, still hasn't cracked it, but still was down on the week. So we'll take a look at some of those trends in part 2 here. Now, if we move over to market internals and we were looking at NYSE 52-week highs and lows, there really hasn't been a whole lot of change in behavior here. We are still seeing more stocks on the 52-week low side, 130 on Monday, 150 Tuesday, 200 Wednesday, 370 on Thursday. So these numbers are still, far outpacing the number of stocks hitting 52-week highs here. And so the trend overall really hasn't changed. And so we're going to continue to measure and monitor this. We really need to see some stabilization here. We need to see these lows start to dry up. We need to start getting an uptick in the number of stocks making 52-week highs. That's what gives us more confidence and sort of, can materialize some type of bottom here in markets. And we're still not seeing that happen just yet. There's definitely some sector rotation going on, but generally speaking here, we're still in favor of the sellers. Now, sector performance overall this week, you can see was pretty weak. We saw almost every single sector in the red. We did have consumer staples eking out a positive week. We saw utilities in the second spot, basically flat, and technology was the third spot here. So it was kind of an interesting mix of defensive and then some tech in here. On the downside, though, energy continues to lag and just try and stabilize. Of course, oil prices are continuing to see that volatility and selling pressure. Communications and services was number 2. Materials was number 3 here in terms of losers, relative underperformers, 1 to 3% down on the week. Correlations, really not a whole lot standing out to me here. I wanted to include this just again for your reference, and you can sort of hit pause here and just pick apart and pick through some of the numbers here. I would say, this, remember, is a 10-day study here. So this is just inherently short terms, 2 weeks worth of data. But basically, you're still seeing lots of just strong correlation across all the indices. You're starting to see a little bit more of a correlation maybe in Bitcoin too, which hasn't quite been on the risk spectrum here, or at least tied to equities too much. You're seeing J&K also seeing a little increase in correlation here. But that's about it. Nothing else really jumping out at me here from this week. Now, if we take a look at the dollar and commodity performance, I mean, natural gas here has just seen a tremendous amount of volatility week over week, and the trends are, the trend overall is still certainly up. We were definitely, in the gutter here over the past 1 month last week, but it came back very strong this week, 17.84% to the upside. We see Bitcoin in the second spot. We see the dollar, which is just continuing to rip and romp to the upside here, breaking more 52-week highs. We'll talk about that in part 2. But that's the good stuff up top. On the downside here, gold down another 2%, still, continues to just really ride that lower Bollinger Band down. Silver, 3.37%. Nobody seems to want to own that anymore. Ag continues to sell off, and then crude oil was down 6% this week, down 15% over the past month. So, a lot of these commodity places in the market, just to use, again, broad, have still been under pressure here. And, minus natural gas, which is, got its own little interesting story and catalyst going on. But it's been pretty tough out there for the majority of commodities, just generally speaking. Now, if we get over to Treasury yields, I think this is where we're going to spend some time, and there's some interesting things happening here. So week over week, and we're looking at the 5 and 10 and 30 year. So I should probably get some shorter term maturities in here to start tracking those. But we were down across the week here in the 5, 10, and 30 year on a week over week sort of basis point change. So that was quite interesting. And really what I wanted to illustrate was the Fed funds. We're going to go back to this chart in just a minute, but I want to spend some time looking at this chart here, which is the Fed funds. There you have it, folks. I hope you enjoyed this week's free edition of our Stock Market Weekly episode. Like I mentioned at the top of the show, if you do want the full version, if you want to continue on and get part 2, then you can head to thetraderist.com/SMW if you're not already here watching it. If you scroll down to the bottom here, you'll see our 2 options to either buy a pass for this week's episode or subscribe monthly. And of course, if you click this Learn More button, we've got a lot more information about what you can expect in the second edition on this page. So that is it for me. I hope you had a great week out there. Have a great weekend, and we hope to see you back here in a future episode.